It's 6 o'clock in London, it's 1 p.m. in New York, it's 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID Livestream, Series 7, Episode 5, that's number 41, starts here. What can I say for you, ladies and gentlemen? This is it, our 41st technological extravaganza, discussing the wonderful world of markets in all sorts of different ways, shapes, and forms. We're coming to you live this evening on LinkedIn, on YouTube, and because we are endemic optimists, hopefully we're coming to you live even on Facebook. Our guest today is Shari Noonan. The topic, the new frontiers of private markets. Shari Noonan is the CEO of Rialto Markets. She's got more than 20 years experience in the financial services industry. Rialto is a Finra registered broker-dealer and an SEC-registered alternative trading system, an ATS, or what we might call an MTF in Europe, which is focused on private market digital securities. Shari has extensive experience in building and scaling operations and products with Deutsche Bank, Goldman Sachs, and Instinet, and was directly involved in the electronification of the equities market. Shari worked to develop many of the initial products in equity electronic trading, including the first ATSs, advanced algorithms, and electronic negotiations. She's got a BS in accounting from Marquette University and MBA from Columbia University, and holds, my goodness, an entire bingo card full of different series accreditations. 3, 7, 24, 55, 63. Definitely bingo. I'm sure that's the top line done for this evening, ladies and gentlemen. Shari, good evening, good day. Where in the world are you today?
Well, thank you for that introduction. I am actually in sunny Florida. I think it's sunny right now. Yes, sunny Florida. Moved here about a year ago and have really been enjoying it. It's quite easy setup. And so that's where I'm at today.
Fantastic. So give us a little bit of a flavor. Whereabouts are you in Florida?
North Florida. So just about 20 minutes south of Jacksonville. It's a little town called Ponte Vedra Beach, and it's really nice. It's quite easy to get in and out. And we moved down here during the pandemic, figured, New York wasn't going to be opening up anytime soon. So we moved down here just temporarily, and we'll see where it goes.
Sounds absolutely fascinating. You're far from the first guest out of the 40 guests we've had to date who has actually done exactly the same thing. In fact, I do believe you're the third or the fourth. We had Kenny Policari, who, of course, he was coming to us from, I think, Boca Raton, if I remember correctly. And there was also Dave talking about cryptocurrency, Dave Weisberger, a few weeks ago, who was closer to Miami. So we've actually more or less got the whole gambit of the state now, thanks to the three of you from north to south. So tell us a little bit about yourself. I mean, you got into electronic trading pretty early. How did that come about?
Sure. So I actually joined Instinet in the 90s, and a complete fluke. I just happened to get called by a headhunter, and really loved the culture of the people that I was interviewing with. And so went into product development. It was the mid 90s. And so electronic trading was not sort of a fait accompli at that point. Joined Instinet, which was one of I sort of think of it as the granddaddy of the electronic communications networks in the US, one of the first, and really lived through and worked through. I joined the product development group and the strategy group. So I really worked through a lot of the market structure changes that were happening, and got really deep involved in market structure in the US at the time. Later in the 90s, started working on a lot of the, algorithms, algorithmic trading, trying to get green screens out of people's hands. Green screens were sort of tethered in monitors that people had as some order management systems were really coming to the forefront. And then in the 2000s, actually, by that point, everyone said, this electronic trading thing is happening, it's going to stay. So went to a large bank, Goldman Sachs. They had just purchased Spearleys and Kellogg, and went there to really help integrate Spearleys and Kellogg, the electronic trading division, into that franchise. Stayed at Goldman for about 7 years, went to the Goldman side. There are actually two different broker-dealers. There's the agency broker-dealer and then the principal broker-dealer. I started off at the agency broker-dealer, the electronic trading one, then went to the proprietary principal broker-dealer, became a sales trader for a few years, back into product development, and then went to Deutsche Bank to become the COO for global electronic trading. This was 2010-ish. So at that point, we were in another state of evolution with the markets and electronic trading. A lot of things had evolved. Spent some time there building another alternative trading system, ATS, and helping to build that out, and then became the COO for global equity derivatives and global equity trading. And then it was at that point, at 2016, I thought, equities has sort of seen a run, very mature market. Let's go find some other markets with some friction in them.
Wow, go find some other markets with friction. Yeah, that's quite interesting after that sort of a run. It must be really interesting. I mean, going to somewhere like Spear, Leeds and Kellogg and trying to take their whole process to a much more electronic level, because I never really thought of them as being supertastically electronic when you would have got there with Goldman's takeover.
So they had really two divisions. There was the market making firm and then the ready firm. And so it was really the market making firm. By the time I got there, I think it was purchased in 2001. I got there in 2003. By that point, the market making firm had been absorbed, for lack of a better term, by Goldman into Goldman's market making franchise. And I really was working on the ready side, the ready electronic trading product, with a group of just fantastic folks from Spear, Leeds and Kellogg. They had a really good franchise that was really broker-dealer focused at the time. And so a lot of the work was expanding that product base into a more institutional nature. A lot of my work was frankly more, I'll call it corporate in nature, just getting all of the pipes plugged in to get, Spear, Leeds and Kellogg's to be reporting into Goldman, to get all of the organizational infrastructure in place, and aligning all of the right items from an organizational perspective. So that's really most of the work that I did. Sort of did a few special projects around market structure and other things, but really that's the bulk of the work that I did. And then did some work on the first alternative trading system over on the agency side before moving to the principal-based area of Goldman.
Fascinating altogether, ladies and gentlemen. I'm here this evening with Shari Noonan. She's the CEO of Rialto Markets. We're discussing the new frontiers of private markets, which we're obviously going to get to in a moment, as we've just been discussing her glittering career across the public equity markets. If you've got a question for Shari, drop us a comment wherever you're watching this, whether it's on LinkedIn, on YouTube, or indeed if you're an eternal optimist, on Facebook this evening. Thank you very much for the opening messages we've already had this evening. Hello, Peter Secon, great to hear from you. Thank you very much for watching. Hi, Simon Huckle, good to hear from you too. And also hello, NSMZ, or perhaps it's NSMZ, I'm not quite sure. Great to see you. Thank you very much for all your kind words. If you've got a question for Shari, drop it into the comments and we'll be happy to take this forward. So Shari, I mean, you talked about that. You mentioned a moment ago, okay, the public markets had somewhat reached a sort of mature point as far as you could see it. So you somewhat, from Spear, Leeds and Kellogg's, Deutsche Bank and all these other places, somewhat speared off into the wild unknown.
Yeah, it was really, 2015, I was working on MiFID II for Deutsche Bank. And, I'm only mentioning that because I know this is an exchange group. So folks hopefully are really familiar with markets. So I was working on MiFID II. And by that point, within the equities world, it was really, turning knobs and dials. Pretty much the market microstructure had been developed and hardened, and really it was turning knobs and dials to affect as much efficiency as possible. And from a broker-dealer perspective, it was a lot of more defense in terms of how can you save costs, how can you make things more efficient, than offense. So with MiFID II, it was very interesting because we saw things come to light from the European side, but we really thought this would be taken on globally, at least from the asset management perspective, around best execution frameworks, unbundling, all of these types of conversations. And what I found most interesting, because I was the COO for global equity trading at the time, is I would talk to my counterparts in fixed income, and they would sort of say, well, this doesn't really apply to us. And I would think, that's really interesting. And I delved more into, the fixed income world, which really got me into the what I'll call OTC world or private markets. I sort of slowly moved off of that private public space into more of the over the counter or off tape world, and really learned that there's not the infrastructure built that there is in certainly the US public equities market structure. And so that's what really excited me were all of the opportunities there. Oh, I've lost the sound.
Sorry, mic muted, my simple problem. You saw a huge opportunity. So how did that drive you forward? What was it specifically you saw that then drove forward the idea to create Rialto Markets?
So we started actually in corporate bonds. I really saw an opportunity in the corporate bond market, and the fact that it was very opaque, that everything was still over the counter, and that's really what made me jump. Once we jumped into Rialto, we started sort of unpacking that market and really identifying areas of opportunity, and we realized, okay, maybe this is not the best space for exactly what we've created, because we had created some tools. We really created some tools for the corporate bond market. And so that really led us into private markets. So from corporate bonds into the private space. And it was really then when we were looking at the private space that we identified what I found to be a really scalable area, because that was really always the issue that we had, was the bifurcation and how do you make this very scalable and very turnkey, much like the public equity markets. What sort of that, fixed protocol, what sort of that scalability, ISDA standard that you can apply to something to really make it scalable and turnkey and understandable by different market participants. That really led us into digital securities. So in 2018, we discovered or started digging into digital securities, which are simply blockchain-based securities. And we were really surprised by what the technology could open up. From a standpoint of having come from a large bank, we had been pitched, I had been pitched on blockchain solutions several times. But at the time, I was the COO for global equity trading, and it didn't make sense in use cases from my seat. But from other use cases, we quickly found specifically for those use cases where there wasn't existing infrastructure, one, and two, where there weren't institutional players that would have some sort of inertia around adoption, that those were really good use cases to adopt this type of framework. And that's really how we landed on private markets, and specifically within private markets, this entire revolution going on really under the surface that you're starting to hear more and more about people investing in private markets a la the Jobs Act. So, what's come about since, 2013, 2017, depending on where you want to put the marker. But the Jobs Act really opened up the ability for the first time in the US for companies to raise money from the public as a private company. And as of this past March, they can raise up to $5 million every year via a regulation crowd fund, and $75 million every year via a Regulation A. A Regulation A gets reviewed by the SEC. It is very, there's a framework around it. It's a very strenuous framework, but you can raise $75 million a year from the public via this tool, via this exemption. And it's really powerful. And so that's really how everything came together for us. And we spent time building out the scale that retail scale and the ability to onboard or have that on-ramp of issuers being able to offer that to the retail public. And then the off-ramp, which is really the alternative trading system that we built and we offer so that companies can go on to the alternative trading system and offer their investors and their employees the ability to monetize that investment.
Mm-hmm. Absolutely fascinating. So let's just break this down, go back a couple of steps. Yeah. I mean, where do you come into the transactions? Are you predominantly in Reg A, or are you in the regulation, crowdfunding, and Reg A thing?
Yeah. So we are actually, prior to March, we only handled Regulation A transactions. But now, since then, now that the cap has been raised to 5 million, we will actually handle both regulation, crowdfunding, and Regulation A raises. I think it's important to note we're not a portal. So a lot of people think of crowdfunding as you go into a Kickstarter, you go into some sort of portal, and you list your company with, thousands of other companies. The way that we really approach it is we provide all of the infrastructure for a company to actually self-host. Now, for a crowdfunding raise, it's not self-hosted. We're actually the platform that it's being hosted on, but it's on the company's website. So you get driven via digital marketing to the company's website. You learn about the offering, and we're behind everything, making sure that the offering is being complied with via securities regulation. So when the investor goes to invest, everything's being done in a compliant way. But we do both Regulation A and Regulation CF.
That's fascinating. Great answer. Thank you very much, Shari. I'm here with Shari Noonan. We're discussing the new frontiers of private markets. Shari's the chief executive of Rialto Markets, which we've just been hearing is now involved in both Reg A and Reg CF money raising, as well as having its own ATS. If you've got a question for Shari, then drop us a line. Meanwhile, if you'd like to learn more about the world of markets, don't forget to drop by exchangeinvest.com and pick up a free trial to Exchange Invest, the daily Bourse business newsletter. Good evening, Liam Caldwell. Thank you very much for your message. Great to hear from you. Thank you to Peter Secon. I noticed that you were having a certain degree of reminiscence, or possibly you were being triggered by the mentions of MiFID II earlier on in the discussions. I know you're a MiFID II analyst previously and still enjoying the wonders of that labyrinthine series of regulations. Of course, blockchain is something else that the likes of Peter Secon and several of the viewers tonight are very interested in. So, Shari, just walk us through. I mean, recently, the smoke signals from the SEC haven't tended to be terribly pro-cryptocurrency, and I think there seems to be a certain degree of wariness about blockchain. How did you find it in terms of bringing your business forward and explaining the digital securities market, as you were as pretty much pioneers in 2018?
Yeah, so sort of my MiFID II. No, MiFID II was my MiFID II as well. So I think we all have a collective same response around that one. But it was really interesting. So in 2018, going into this, we actually had to request a change to our membership application to be able to offer an expansion to our mandate to be able to offer transactions in both digital form as well as traditional form. We didn't think that everyone would, we thought that there would be certain institutions that would take a while to adopt digital securities. So we didn't want to leave traditional forms on the, take them off the table and move to solely digital. So we actually expanded our mandate to be able to do both. During that process, I thought it would be, I've been involved with, actually our team's been involved with about 9 alternative trading systems, building and operating them. So, I'm pretty familiar with the Finra processes and discussing with the SEC. And so I thought it would maybe be a 6-month process, a 9-month process. And it was really interesting because in 2018, everyone probably realizes we were hot off the heels of the ICO craze. And so there was a lot of reticence to, really even discuss, digital securities. People, were really trying to understand the concepts of blockchain and what this meant in the financial infrastructure at large. And so it was a lot of educational sessions with a lot of staff from Finra and from the SEC. It took us over 2 years to get the approval, which was a long time. But I'll also say I do think it was a lot for the regulators to get their head around, and there hadn't been necessarily a ton of goodwill that had been generated prior to that with a lot of the things that had happened in the ICO space. So they were really wanting, I often caution people to remember that the regulators don't get paid if things go well, but they get blamed when things go horribly wrong. So they need to be cautious. That's their job, or risk managers. So it was a lot of explaining, a lot of really describing the technology. And at the end of the day, what I often went back to is this is Java versus Unix. We should really be talking about what are the requirements from a broker dealer, from an alternative trading system perspective, that you would like us to adhere to, and let us make sure that we're adhering to those to those rules, to those principles, and let's not worry about the technology that's powering it. I think, though, given everything that was going on, really namely, a lot of it came down to, it's expanded since then, but at the time in 2018, 2019, it really came down to this concept of custody, and what is a good control location. And can a broker dealer be a good control location? So can the risk be solely held in one place? And that was pretty terrifying, because in public equity markets, you've got DTC, you've got the depository trust company that really stands in the middle of that infrastructure. And so this is in my opinion only, I really feel like the regulators were looking at it saying, in our mental model, we've always had this leg of the stool that's been sitting there, and now it's not there. So what do we do? What's another sort of counterparty risk control that we can look at and put into place? And that was where most of the conversations went. We did eventually take custody off the table, and that's really when we begin to see a meaningful movement forward on our application. I think it will take some time for the SEC to really get their heads around what that's going to look like and what's going to make sense and how they're going to manage that counterparty risk. But at that point, that was their central issue. I think today it's now expanded to CBDCs and stablecoins and a host of other areas that are just intrinsically entwined when you think about what have regulators used as control mechanisms for the financial system overall. There have always been these choke points, for lack of a better term, where things have been able to kind of be moderated. And that's, I think, where the focus is.
Really interesting altogether. So therefore, when you go to the regulators, you're talking your way through, but they get very, very worked up about the whole idea of custodial control. Okay, I can see that. Now, explain to me, do you actually create your own register for these companies, or where are the stock registers actually being held for the companies you're dealing with?
Yeah, so we work with transfer agents. We work with transfer agent, and there are, really a new breed of transfer agents, and, transfer agents that are existing transfer agents that are transforming themselves, that are really seeing the possibilities when you adopt digital securities and having a blockchain-based focus where you can, especially in private markets. In the past, you would have a company and you would have a cap table, or, I'll call it a cap table because a lot of these are just cap tables and not on registered transfer agents, even though they're migrating to that because some of the regulations are requiring them to. There wasn't there weren't requirements to have them in the same format that a public company would have. And even in a public company, you could have it in, maybe a older type of technology because it was $1 billion market cap. Now, the challenge with a lot of these market participants is they need to make it cost effective for companies to do a $10 million raise and have 10,000 investors and be able to message those investors and get documents to those investors and send dividends to those investors and have corporate actions for those investors. That's challenging. And that's where I think, blockchain, in my opinion, really is quite exciting, because you can have, a mutable record, you can have this record, and you can do all kinds of interesting things. And I think we're seeing this in some other areas of the market that I think will sort of get folded in, or will, capital markets will evolve to adopt some of these features that are currently in unregulated realms today.
Yes, it's very interesting. I mean, the whole transfer agent business has been such a kind of sleepy hollow for many years and just immersed in paperwork, and then gradually worked their way into kind of spreadsheets. But now all of a sudden it's really come alive. And of course, they don't necessarily exist in a lot of jurisdictions, particularly in Europe, in the same way that they do in, say, the USA or Canada, amongst other places. And it's fascinating when you're talking about how that all brings together with the whole immutable trust factor on the blockchain, which brings us actually to our first question of the evening. So it's coming from, it says on my screen, a LinkedIn user, but my masculine intuition suggests it might be from the offices of Women on It, the Women IT grouping. Good evening, Shari. Great to see #Women on It hacking the future. How did you develop the blockchain software?
Yeah, absolutely. So the way that Rialto works is we are a broker-dealer and alternative trading system. The way that our technology stack works is we have technology, and I promise I'm going to answer your question. We have technology on the front end that helps with capital raises. That's not, I'll call it blockchain adjacent, because as the investors come in, as they pass AML KYC, as their funds come in and get reconciled, which all has to be scalable, that is then coded into the blockchain. We have a couple, we have private and public blockchains that we work with. That's the first intersect with blockchain technology. We worked in conjunction with a number of transfer agents and integrated into what they had available, because we need to integrate with transfer agents. So that's the first intersect. Once the capital raise is done, the issuer comes onto the alternative trading system. We have a view into the cap table, so that when a seller comes in and would like to sell their position, we then lock up those shares on the cap table via the transfer agent, but through messaging, and lock up the funds through the payment rails, which are also either blockchain enabled or API enabled, depending on the bank that we're interacting with. And post the transactions, then we send messaging out to complete that match or that transaction. So that's the interaction. That's the interaction of the entire system. I hope I answered.
That's really cool.
Yeah, it's really fascinating. And I just want to say one other thing. We did not land on one blockchain. We're blockchain agnostic, because we really think, it's such early days that there will be several different blockchains that we integrate with, and we didn't want to exclude any particular transfer agent or payment rail or participant. So we work with many, and we've got a specific team of, I'll call them experts, that we use, that really work with all of our blockchains and do that integration. But they're specific technologists that understand blockchain that are on our team.
You preempted my next question, actually. That was my follow-up, exactly. That was feminine intuition in action, therefore. Thank you very much, Shari. No, because that was exactly what I was interested in, because it strikes me that a lot of people get themselves incredibly wrapped up in the first memorial church of whatever happens to be the current blockchain du jour. And it seems to me it's a little bit like deciding that you're going to support, I don't know, the Cord or the Duesenberg automobile company in the 1920s, who at the point in time of their development were actually some of the most advanced cars around, but they ultimately didn't manage to win the race. Which brings us to Peter Secon's question. The year 2020 was turbulent for private markets, as it was for much of the world, for various reasons, including COVID. What's the rest of 2021 look like going into 2022? And what are your biggest challenges?
Thank you, Peter. It's really interesting. I think in the US specifically, this whole concept of raising from the crowd is very new for private companies. And so we've really spent 2020 and 2021 educating. It's been a lot of educational webinars, conferences, getting out and talking to people and educating them. And now in the back half of 21, we've really sort of gotten the eye of a couple of industries, and certain industries are really driving this concept forward, I think. And those industries are, green tech. They're industries that really resonate with the public, people who want to make conscious investments. So green tech, cannabis, people, really want to invest in cannabis, space technology, and I would say med tech as well. A lot of people, med technology, especially some of the cutting edge medical technology companies that are developing today, resonate very personally with people. So those types of personal investments are really where we're seeing outsized growth in those sectors. That's where we're seeing the trends. Where we've really seen, what the rest of 2021 looks like in 2022, we're actually seeing a lot larger raises. So I can tell you, we didn't do regulation crowdfund last year because it was capped at $1 million. Since the cap was raised to $5 million, we're seeing many more companies come in at $5 million, and we're working with them. And they're early stage companies. So what I mean is they've already got 3 or 4 rounds under their belt. And what that means is, they've got 3 or 4 rounds under their belt. So they've got a really diverse investor base. And they've also sort of got the hang of how to do these raises. They've got the digital marketing down. They understand what it takes to close a raise. We just extended a raise actually late last week for this company called Atlas Motor Vehicles. They're an EV company, and within a month they raised $4.5 million. That's because it's their 3rd or 4th raise, and they have a committed shareholder base. They are very transparent with their product development. They're always keeping their shareholders up on what's going on in the company. And so they've created these ambassadors within the company. It's a really smart strategy. So we're seeing more and more companies do that. And they're raising at the 5 million rate. We're also seeing in Regulation A, more companies. A year ago, we were seeing companies come in at $15, $20 million. Now we're seeing companies come in and apply. We don't know, they're not live yet. We actually have our first one go live tomorrow for a larger size. We're having companies apply to be qualified to raise $50, $75 million, which clearly are much larger raises than traditionally you would be going after in the Regulation A space. And I think that's really garnering the attention of some of the smaller investment banks and even larger investment banks, where this is, starting to look like, their middle market, client, someone who's coming back to the well every year at $75 million a clip.
It's really fascinating. It's quite incredible altogether. We had David Weil IV just on a few months ago, who's, I suppose, really the father of crowdfunding in the United States of America. And it's amazing to see how, after so many years in the wilderness and really him banging his head up against a very, very thick stone wall of the kind we have around here in Valletta, Malta, and managing to break through. It's quite amazing what's been going on with Reg CF. And as you say, the Reg A business is just taking off. Those numbers are stunning altogether. And it's really good because actually that's delivering jobs in a way that quite often public finance may be rearranging, public markets may be rearranging the finances of things, but this is clearly adding jobs to the coalface very, very rapidly. So thank you for that question, Peter. Second, moving swiftly on, we've got a brace. Oh, sorry, go ahead, Shari.
I'll just add one more thing, because I'm cognizant I didn't answer the biggest challenges. I just want to say, I do think that the biggest challenge is right now really it's so early in the game. So I do think there still is a misconception around the space. People still think of this as Kickstarter. So a lot of times we're educating companies, we're educating investors, we're educating a lot of different constituencies about what this is not, what the expectations are, what they need to do, what the requirements are, and that you can't just sort of put up a website and expect to raise $50 million. It's a process, and you need to have the right strategy going in to be successful. So that's really our biggest challenges right now. I think another challenge that will pass, but we're in the middle of, is I do think, there will be some actions against certain companies that did not do this correctly, and certain players in the industry that, were just not mature enough to take on the responsibilities that they've taken on. And that's all growing pains. I mean, that's growing pains. And to me, that's good, because that makes the industry stronger, right? But we'll need to move past that, and we'll need to gain the trust of people to be able to have a really vibrant, to have this be a vibrant part of the capital markets.
Fascinating answer. Thank you very much, Shari. And certainly, I think you're right. You put it very diplomatically there. I think there are going to be a few orange jumpsuits on the horizon for quite a large number of players. And also, particularly when we see our crypto brethren, I think they're being measured up for orange jumpsuits en masse at the moment. Liam Caldwell has asked a question. Do you think the influence of blockchain will result in its own global exchange, albeit probably highly regulated in itself, that's not limited to one specific government's regulatory requirements?
I love that question. So to me, that is an amazing aspiration, and technically, obviously, completely possible. From a political perspective, I think challenging, but also possible. I mean, when I think back to my global bank days, that's really what we had, right, with different global banks. Of course, it was 2,500 different systems, but in theory, it was one global system that just had different rule sets applied to it. And I'll never forget, there was one. I'll protect the innocent. There was one particular government regulatory entity that came to us when I was the COO of global equity trading, and basically said, give us all of the rules for all of the other jurisdictions globally. And so we handed them over all of the rules that we, were required to be held to for all of the other jurisdictions. And they came back 2 or 3 months later and they said, okay, all that applies now. And we sort of laughed, because we knew that was obviously where this was going, where the conversation was going. But, I think rule harmonization is desperately needed. Probably more in the U.S. than maybe other jurisdictions, but certainly from a global perspective, and anyone who's worked in global banking or global finance understands that just as much as I do. But if we can get some sort of harmonization around rule sets, we can get there much easier. Even if we don't, I think we can move closer to an exchange based with a blockchain backbone that just has different permissioning that has different regulatory oversight. I don't think you're ever going to get away from the regulatory oversight, though.
That's a really interesting and thought-provoking answer. I hope you're happy with that, Liam. It's quite intriguing altogether. Thank you, Ed McCardle, for your comment, saying that it's been very insightful. Thank you to Shari. That's really appreciated. Liam Caldwell, moving on, I do believe you had, oh no, was that both of your questions? No, you have a second question lined up in the stack. Or did we get there already? Have I done your questions in the wrong order, or did I get there the wrong way round? Oh, do you think the influence of blockchain? No, we've had that question, haven't we? It's just the same question twice, basically, isn't it? Sorry, I have a problem with my computer stuck, so help me here, production team. Yes, we've got the same question twice. So Jeff Cutler has asked us a question. Hey, Jeff, from the Global Association of Risk Professionals. Great to hear from you this evening. Hope all's well. You, if I'm not mistaken, Jeff, may be the last man in New York. at this juncture, because I think everybody else, man, woman, and children, all seem to be in Florida. So I hope it's not too lonely up there for you. How crowded would you say your niche is, Shari? Is it hard to break through the noise with your message?
So that's a really great question. And first of all, Jeff, I have to say I was in New York in June, and I was very, I missed it quite a bit. So might be back there very soon. But I think it depends on what sector we're talking about. I think for crowdfunding, it's still very early days. There are definitely a lot of platforms out there. I think when we're talking about the self-hosted solution, which means, we give the companies the ability to sort of do their own raise on their own site, and we just power the back end. That's a lot less prevalent out there, but is starting to gain traction as companies become more educated on the different capabilities in the market, and just the market just evolves. In terms of blockchain, so if I turn my attention to digital securities, I also think it's early days. I think, in 2017, 2018, certainly in the space I was in the US, a lot of people were, planting their flag and sort of claiming their space. And then the whole world changed, right? The regulatory landscape changed. A lot of things changed, and a lot of people had to pivot. A lot of companies had to pivot. And a lot of people had to kind of understand where their Legos ended and other people's Legos began. And so that's been one of the funnest parts of building this company is, you build something and you're like, I really hope it connects in with, the different partners that I'm working with, and that, all of our visions align, because you need to make sure you don't have overlapping capabilities, and you have complementary capabilities. And so I still think we're very early days in terms of the digital security space. And even if you go down to the narrowest definition of digital securities alternative trading system, I think there's only 4 or 5 in the US. And to me, that reminds me of the very early days in the public equities market, where there were, 4, 5, 8, 10 electronic ECNs. And that then proliferated to 30, 40, 50, and then there was a bunch of consolidation. I think the same thing will happen, that there, if the SEC, allows that, there will be a proliferation, there will be a consolidation, but, it doesn't mean that it's a winner take all. I think there will definitely be multiple alternative trading systems in different sectors that will all identify their message, what their value added proposition is, and who their target audience is. So for example, from our perspective, what we've done is we've built the rails all the way to the retail investor. So we allow the retail investor to actually participate in our alternative trading system. There are others that say, I want to be a broker to broker system. I just want to allow brokers into our alternative trading system. It's different value propositions for different ATSs.
Fascinating altogether, Shari. So in that basis, I'm interested, because you say, okay, you look at absolutely the story of the ECNs met the ATSs, et cetera, and that led to consolidation. But that was in a much more finite environment, wasn't it? The finite environment that we had of the ATS business, or the ECN business, or however you want to define it, was certainly one whereby you were talking about the public markets. And the public markets, even though there were more publicly traded securities in those days in the USA, you're still talking about roughly 6,000 securities. Come on now. The United States of America is 6 million companies, something like that. Surely the cycle's going to be a little bit longer in order to manage to reach the point at which we start rationalizing crazily.
And yes, and it's even more than just the companies, because, when you talk about the introduction of fractionalization and fractionalizing assets, and some of the conversations we're having with, folks who are saying, okay, I don't think creating an NFT is the way to go. Can we have sort of your version of a securitized NFT to do, whether it's, I'm an art museum and I want to have another revenue stream, and I want to sort of take this piece of art and fractionalize it and reach my captive base of supporters, or other areas like that, I think, the possibilities are endless in terms of what you can take out there, real world assets, fractionalize, offer, if you have a captive audience associated that aligns with your thesis, that aligns with you. I really think there are lots of different ways to be able to monetize these assets that we've never been able to consider, and that will continue to evolve. I think also, you sit there, a lot of people used to say to me, well, okay, it's a $10 million offering of a company, much like corporate bonds, right? Very, very bifurcated market. But once you get some sort of mass, to me, this is the first inning and the really base layer. Once you get a critical mass, you can do all sorts of things around productizing those investments, wrapping them in certain sleeves of sectors. So there's just a lot of productization, I think, that we're laying the framework for. And a lot of times when I talk to other groups about this that aren't as close to the markets, I often talk about, it's the vinyl versus MP3 or putting it digitally. Once you have something digitally recorded, there's just so much more you can do around slicing, dicing, and wrapping it.
Excellent. Some degree of designer mojo for the rewriting and reworking of all of these Reg A's and Reg CFs. No, I think they're great points, actually. Really making great points altogether. Jeff Cutler says he's still stuck in Brooklyn on a dreary day. Thank you very much, and the best of luck to you. Thank you very much, Jeff, for your questions. Great to hear from you. Now, Marianne Madeira, she's moving on, and she's saying, so she's trying to pin you down. So explain to us then, Shari, where exactly do you use the blockchain in the fundraising and the ATS process?
Absolutely. So if you think about where we use it, and it's different for different participants. So I'll caveat it there, and I'll actually talk through where other people utilize it. So where we utilize it is we work with transfer agents. So transfer agents in the US are the official books and records, show the official beneficial ownership. In the capital raise segment, we provide the front end. So an investor comes in, there's a button that says invest now, they click the invest now button, they answer a series of questions. You can think of it as a questionnaire around suitability, know your customer, anti-money laundering questions. That information feeds through to our systems to perform all those checks, and feeds through to us with a risk score, where we then do any vetting, any calls we need to do, any exception processing we need to do. Once all of that's done, that's sort of stage gate one. I call that stage gate one. Then we need to make sure the money came in, right? In the US, very fragmented payment system. You've got checks, you've got checks, ACH, wires, you've got lots of different ways, credit cards, lots of different ways you can pay. Those all have different timings associated with them from when they hit the escrow account that is set up. We then manage to reconcile to the escrow account. All of this is done systematically so that we're not managing each investor. It would be very difficult to do that for each investor when you're talking about thousands of investors making a $50, $200 investment. Once those two things are done, we then send that information to the transfer agent. The transfer agent records that, and we do that, we send that information and actually send it via a blockchain message. So that's where we intersect with the blockchain. We have either a permissioned or a permissionless, but usually we work with permissioned blockchain, where we send that information, update it to the transfer agent, so the transfer agent knows this is a vetted investor, should be on the cap table of the company, and we're set off and we're good to go. So that's the workflow on the capital raising side. And the transfer agent then can bring the investors in, lock them down, and have them on their side. But it's basically behind the scenes, we have sort of a handshake that's a very easy handshake because it's blockchain based. Now on the ATS side, the way that we work is we have the same handshake. That same, let's call him Jim, came in. We put him through the stage gates. He's now an investor. He shows up on the cap table. He wants to sell his shares. He logs on to Rialto. He says, I'd like to sell my shares. Before we allow him to put that order into the system, we check with the transfer agent behind the scenes. We have access, we have visibility into the cap table, and we confirm that one, the shares are available, two, they're unencumbered. So when we say they're available, one, he holds them, right? He actually has them, but two, they're available. So in the US, it's very complicated. There are different regulations that you can raise money under, and they have different seasoning periods or different periods with which you have to hold them before you can actually sell them. So we make sure that they're actually freely tradable, that you can actually sell them, and that they're unencumbered, meaning there hasn't been a lien put on them, for some reason or another from a legal perspective. Once we've confirmed all of that, we can then put the order onto the alternative trading system, and it's a valid sell order. So that's how we intersect. The same thing with the buyer. When the buyer would like to purchase, we're doing the same sort of check to make sure that they have the purchasing power. I hope that was clear enough.
I think that was fabulous. If Marianne's not clear, she can always ask you another supplementary question, I'm sure. But I think it's very interesting when you talk about availability, encumbered, unencumbered, and things like that, because that strikes me as one of the interesting areas where, in many ways, the crowdfunding nexus, the intelligent ATSs are actually ahead of the game compared to even securities exchanges, where, let's face it, everybody's pretty much believed when they say, I want to sell 1 million shares of whatever it is I want to sell. Nobody actually asks for any proof that they own it or that they've borrowed it in advance of whatever the transaction may be. And that's a very, very different situation and state of play to what we're seeing with technology in the crowdfunding state. And it's interesting. I mean, why then, with the encumbered, unencumbered and things like that, why do you particularly use a blockchain message for that? Is it simply for the record, or why?
So it's for the record, but it's also because blockchain is really so a lot of people talk about the laser light show that you can do with blockchain and talk about, you can deliver a digital picture of a monkey or, whatever else. And you can do all of that, and it's great. And, that's all interesting. But to me, I want to make sure we don't lose sight for, the first instance of usability, which is really efficiency and being able to do, have a massive amount of shareholders and manage those massive amount of shareholders at scale for a very small raise. So, and that includes messaging, that includes voting, that includes everything associated with the functionality that would be very difficult for a traditional, transfer agent that's doing this in an Excel spreadsheet or doing this in a traditional way when I used to get stuff in the mail, right? What a nightmare. That just wouldn't be cost efficient. So to do it in a blockchain-based form is really the base case for these crowdfunding raises, because you can raise capital in an efficient way via being able to pass that information and be able to have those payment rails built in. Then to be able to manage the cap table in an efficient manner and be able to make sure that any corporate actions are handled efficiently without any major blowups is the second reason. And then three, anything on top of that, if you want to have any sort of interesting perk, Ford offers a discount program for anyone who holds Ford directly with them, right? Any stock that wants to do, any company that wants to have a perk embedded in, being able to manage that at scale efficiently in a cost-effective way is enabled via blockchain. And lastly, I'll just mention like corporate actions. So you can embed triggers where you automatically are moving funds from one account to another automatically for thousands of people, right? So automatically from the issuer's account into each of your subscribers' account for 5 cents. Those are the types of capabilities that I see, we're not there yet. Issuers aren't using that yet because they're so early stage, but I see this being the base of the rails that are being built out. I mean, I don't know, in my career, I was a sales trader for 3 years. In my career, the biggest errors on my desk were corporate actions. Someone forgot to roll something. Someone forgot, that some futures thing was coming up and they forgot to put an order in, and it was a massive, issue, 3 weeks down the line when people realized it from a risk management perspective. So all of those being triggers and automatically executing are massive saves.
Very, very interesting. And actually on the same theme, we got a couple of great comments that have been going on at the moment, and there's been a back and forth between Charlie and Robert Brown. I'll come back to that in just a second. But Alex Maturi, who indeed is a previous illustrious guest, an alumni of IPO-VID. Great to hear from you, Alex. I hope all's well with you. So Shari, how do you handle transactions where the funding was not done on your platform? Do you use the blockchain to interface with the company for ROFRs, restrictions, etc.? And I think we might have just a slight problem. I think Shari was nodding vociferously there, but she seems to have slightly disappeared from view. While she's trying to reconnect, let me just go back actually to the comments we were having earlier on. So there was Charles ASGS. He was pointing out a regulated global public exchange on the blockchain would have limited inventory, and also because someone is determining how a transaction is settled. And indeed, Robert Brown of clearingandsettlement.com. Hello, Robert. Great to see you this evening. Thank you once again for watching and your interaction. Trading systems of any sort that match the counterparties, earn commissions, and that determine how a transaction is settled will be regulated. And magically, we have got our guest back again, Shari Noonan. I'm actually amused because I have had thunder, lightning, and a total tropical storm has taken place here, and all that's happened is that my light switched off on the side of the desk a couple of times, and not quite sure what happened to you in Florida. We were just concerned it was the big one, the mega final end of hurricane season had suddenly decided to take Jacksonville and Environs out there. So let me just remind you.
It was 100% user error. I clicked onto the comments and I meant to click onto the chat, and I clicked into log in and it went.
There you go. If only we had a blockchain for that as well. Corporate actions are one thing, user input, human errors, it's basically dangerous. So back to this question by Alex Maturi, how you handle transactions where the funding wasn't done on your platform.
Yeah, so absolutely. So we definitely work with issuers where funding wasn't handled on our platform. We just simply connect into the transfer agent that they, hold their securities at. So it's pretty easy. So right of first refusal and restrictions. This is where today. So we really see a bifurcation of the world that we deal in. And the world we deal in is sort of freely tradable, scalable, regulation A, really no restrictions. We do some regulation D securities that have a year seasoning period, but there aren't too many other restrictions on them. There are other companies in the US that really deal with what I term more sort of the unicorn hunters that are really working with those 2,000 companies that are planning to be unicorns or are unicorns that are venture backed. Let's just call them the venture backed companies, primarily venture backed companies. Those securities are very, very complicated, very complex, have a lot of restrictions, have rights of first refusal. And the way that, and we don't deal in that space because there are many other companies, I'll name them right now, Carta, Forge, AngelList just got into this space, that already, NASDAQ Private Markets, they all deal in this space. The way that they handle it is not via blockchain, but via good old fashioned, ECM desk, right? Rolling up the sleeves, getting, a bunch of people to call folks, getting lawyers in the room to work out right of first refusals and those restrictions with the issuers and their investors that are already on the cap table. I will say, my goal is in the future that we started specifically at the standardized securities route because we thought that would be easier to bring onto an alternative trading system in a scale manner so that we could offer it in a cost-effective way. My goal is eventually, as we get version 2, version 3, version 4 up, we can handle more of those restrictions within the digital security. But to be fair, we're not there yet. And I haven't seen that in mass. I've seen it in one-offs, but I haven't seen it in mass in the wild yet.
Fabulous answer altogether. Well, we're getting very close to the end of our hour, but we're going to squeeze in a couple of questions first because Liam Caldwell has returned. A question for you both. My last question, surely only for this evening, Liam. Come back next week. We'll be delighted to hear from you. Thank you so much for your input today. Why do people not talk about cybersecurity enough in the blockchain space? Surely it has to be almost, if not just as important as regulation itself.
Absolutely. I mean, it's absolutely key. And every time you hear about a hack, every time you hear about, it doesn't matter if the money's been returned, what's happened. I will say, and we talked about this quite a bit with the regulators, a few things. One, even though we integrate with both public and private blockchains, it's important to note that the transfer agents we work with, these are securities. And so these are securities and they're different from cryptocurrencies and other crypto products from the standpoint of these are not on a wallet, right? You don't put them on a wallet, and if you lose your wallet, you've lost them, because they're with a transfer agent too. So there's a record of beneficial ownership, which means if something gets hacked, if the owner gets hacked, if something happens, you can always burn the securities and reissue those securities under the rightful owner's name. And so there is that capability in the securities rule. These are not bearer instruments, unlike some of the cryptocurrencies. But I will say cybersecurity is hugely important. And I think there's a lot of, you only live once, and let's just code it up and throw it out there and see what happens. And obviously, we all know, everyone on this call knows that that's not the way it works in the regulated world.
I think the other thing is also it's always useful to just borrow something off GitHub without really checking that it works first of all, and then throwing it into your regulated application. That always works, as we all know. Thank you very much, Liam, for your question. Thanks, Jeff Cutler. Great comment on it. Cybersecurity, definitely important, and indeed digital user IDs. My goodness, that could be a whole topic of conversation in its own right. Now, Shari, look, you're there. You're making your very own variation on the theme of capital market revolution in the private markets. So let me ask you, where does the capital market revolution go next?
So I definitely think for private markets, what we're seeing in the US is we're seeing it move to the ability for issuers to be able to offer these, their securities in a much more streamlined way, and going to other avenues to raise money, and also to be building, curated focused, creator focused companies, whether that's, creator focused in our minds, or focused on building this flywheel where you build a product, you have those consumers of that product invest in your company, and then you have people that are more aligned with the overall thesis of the company. So it's a really fascinating, to me, journey and trend in capital markets overall. I think where it's going to end up is, one, we're going to see more product development in this space. We're definitely going to see an explosion in this space, but I think the explosion is going to be in the products that are offered, as well as this becoming more global. So, people outside of the US being able to invest more at scale, and companies outside of the US taking advantage of this through various different means. But that's where I get excited about it.
Whoa, a growth in products, a growth into the global market. I mean, actually, the internationalization even of the Reg CF, Reg A marketplace itself could be a very, very exciting opportunity for the future. You've hit on the possibility of how interesting it is in so many of the personal investment spheres that are being driven at the moment. We're not just talking about the GameStops of this world. We're talking about, particularly, you mentioned cannabis, medtech, space exploration, indeed ESG issues as well, Shari Noonan, while we've been talking about the new frontiers of private markets. It's really been a joy chatting to you this evening, Shari. Thank you, the CEO of Rialto Markets. You've given us some great insights into how you use blockchain, into how your Regulation CF, your Regulation A platforms are going together. Some super numbers. It's so exciting to hear that people are rushing up towards the top end of what is the possibility for the $75 million limit. And actually, I'm going to allow him a last question. Chris Pryor-Williard, one of our most long-standing experts in the world of settlement from the European side of the pond. Would digital American depository receipts be of interest, Shari?
So absolutely. I think anything that makes the markets more efficient is an area for interest. So absolutely. I think that you're going to see different use cases be rolled out over the next 12 to 24 months.
Gosh, what an exciting 12 to 24 months we have ahead of us then. Thank you very much, Shari Noonan. Thank you very much, Chris Pryor-Williard, for that excellent final question this evening. Thanks to all of our contributors this evening. NSMZ, Simon Huckle, Peter Second, Ed McCardle, Liam Caldwell. Thank you for several questions this evening, Liam. Jeff Cutler, great to hear from you. Glad there's still somebody in the New York State area. Marianne Madeira, interesting point about the blockchain itself. Charlie ASGS and Robert Brown, thank you for your points. Alex Maturi, really appreciated your question altogether. Go back and pick up a listen to Alex's excellent discussion of the world of indexing from his perspective as the former CEO of S&P Indexes. And indeed, of course, finally, Chris Pryor-Williard. Ladies and gentlemen, next week we are going to be coming to you live from a new exchange. We're going to be in Nassau, in the Bahamas, no less. It is my absolute pleasure to be talking to D'Arcy Ramming Sr. He's the original co-founder of Arawak Exchange, to which I happen to be proudly an advisor. We're going to be discussing the Caribbean marketplace, the wonderful opportunities for SME funding, building on, of course, this evening's topics about the new frontiers of private markets with Shari Noonan of Rialto. Ladies and gentlemen, my name's Patrick L. Young. If you'd like to catch up more about the world of financial market structure, don't forget the Business of Bourse's daily bulletin. That's Exchange Invest. You can get a trial from exchangeinvest.com. It only remains for me to say thank you very much to all our contributors this evening. Thank you in particular to Shari Noonan. What a gripping hour that has been. And I wish you, ladies and gentlemen, all a great week in life, blockchain, and markets. My name's Patrick L. Young. See you here, same time, same place next week.